Okay. Mayuresh Joshi of Angel Broking has joined us. Mayuresh, how are you reading the last few trading hours, especially all of Monday? Would you be an incremental buyer at these dips?
Afternoon, Lata. Clearly, I think the markets are witnessing a phase of consolidation from the rally that we've seen post-budget. But again, I think structurally and fundamentally, what we are understanding and taking into cognizance is that the earnings re-rating should take the market higher. And again, the earnings which are expected to start at least from a Q4 perspective are not expected to be great. So I think the markets are cognizant of the fact that the next 2 quarters will be weak in terms of how the earnings forecast is looking, not just for the Nifty or the Sensex company, but generally for the broader universe as well. Secondly, I think the CAPEX cycle that one really harps about at this point of time is going to take much longer. So clearly the markets are evidently experiencing the fact that a lot of these hinges on how these two factors play out. The budget outlay has been extremely good from the exchequer. What happens with the monsoons, again, largely will take into account how rural discretionary demand and spending will take place. Again, from a short-term perspective, the markets have factored in.
Mayuresh, just hold on to that thought. Just need to address the market technicals a bit again, because as I said, it looked like a matter of when and not if the Nifty will break 7600. That's happened. Let's do one thing. If Hassan can quickly show us the 7500 and 7550 puts and see the kind of premium surge that we have seen. 7550 put has seen a 116% surge in premium. That's clearly the level at which the bears are active, because that's the way they would want to play this market. So 20 rupee premium is what we have on 7550 put. That's moved up from 10 rupees to 20 rupees. 7500 put premium hasn't gone up as much because you only have 3 days to go for expiry. So obviously there's that factor at play, and that's why 7500 put premium, though it's up about 84%, that's also quite active in trade right now. So it's not looking good. And the kind of market that we have been in, it's been a trending market. It's given you trends, and if you get into the trends early, you make a lot of money. Now I'm not saying that today what you've seen is a complete trend reversal, but the market has given some hints of trend reversal and some hints of peaking out at 7700, and there's a good chance that if traders keep that as a stop loss, a short trade might be rewarding, because that's what the market has been doing, giving you these indicators of topping out and bottoming out.
Well, it dwelt under 7,600 for about 60 seconds or maybe 100 seconds, Sudarshan. Would you be worried? It's at 7602 now. Would you still want to take off some money from the table?
No, we take off all the money. That's the discipline of the trading zone. Because if the idea was that a stop is at 7600, whether you bought at 7300 when the first buying happened, 74, 75, 76, or at 7700 today, 7600 was the stop. That has been touched, and you get out of the markets, and we'll then again have new patterns and new trades later.
Okay, let's do one thing. We'll take a break on that note, because we have gone for a goodish bit. So as of now, the Nifty went to below 7600, has held it, but it looks like it could be at the cusp of a breakdown. On the other side, of course, we'll discuss fundamentals with Mayuresh, and Sri Shankar of Prabhudas Lizardhar will also be with us with some of the top investment ideas at this point.
The consensus seemed to be far more negative than it should be. So I do think that the Indian economy is actually doing much better than what people think. And perhaps there should be that, if that's not consensus, then there is another reason to be positive about the market. Nifty and oil are positively correlated over long durations, not correlated over a few durations, but never negatively correlated. So if oil is doing badly, you will not see Nifty do well.
Welcome back. 7,600 for the moment is held, and the dip below that level lasted for all of 1 minute. But for our expert, for Sudarshan, this is signal enough to take off money. But for Rahul Mohinder, he would rather wait for 7550 to take off his money. He is still a buyer at current levels. We will go back and discuss other stocks with both our experts. For the moment, let me welcome R. Sri Shankar, Head Institutional Equities at Prabhudas Lilladher, into the conversation. Good afternoon, Sri Shankar, to you. What's the sense you're getting? You will have the courage to pick up at current levels, or in fact your courage is even more?
Post-budget, in fact, we have revised our trading range. Before the budget, we had a trading range of around 6,800 to 7,500 for the market, which we have increased from 7,100 to 7,700. The simple reason being, I think budget was not at all negative according to me, and given where we are in terms of fiscal scenario and the scenario which is developing globally, the downward pressure was probably more or less over. So that's the reason why we increased our trading range. Having said that, yes, the kind of rally that we saw in commodities especially did surprise me. But my thought process and as a house, our thought process is that that's something which can't be sustained for a longer period of time unless you see the global economy itself improve quite a lot. And that's why we have come to this trading range of 7,100 to 7,700. The levels.
Okay. Mayuresh, at this point, we've seen quite a bit of decline in banks and metals, the ones that had the powerful short covering bounce or, the biggest rally in the rally that took place preceding today's fall. What's your outlook on both banks, private sector banks like ICICI Bank, and metal names like Vedanta and Hindalco, where we've seen big cuts in today's trade?
So afternoon, Arjun, if you look at the bank structure per se and the corporate exposure that a lot of these larger private sector to the tune of ICICI Bank have, the numbers should be more or less in line with what the management has guided in lieu of the Q3 results. So the numbers are expected to be extremely soft and the softness might well continue into the first quarter of the next fiscal year as well. But having said that, our own take is that the peaking off of the asset quality specifically, at least for a larger part of the private sector banks having corporate exposure, stroke SME exposure, should largely be over the next couple of quarters. And if you see a genuine credit revival happening over the next 2 quarters, our own take is that the earnings revival for these larger private sector banks will be much faster than what you're probably anticipating for the public sector counterparts, with the pain in terms of both asset quality and deterioration in book might continue. So again, I think capital adequacy is extremely strong. With the RBI juggling on the revaluation reserves, they're still in a very, very strong position to leverage their branch network. So I think the larger private sector bank and a chunk of these banks, as we've discussed a lot many times before, look very, very attractive to us. On the metal side, clearly, I think what will happen on the demand-supply dynamics is going to get played out on the balance sheets of a lot of these companies. Clearly, structurally and fundamentally, nothing has changed over the last few weeks, except that commodity prices have probably seen a rebound globally. But again, I think this demand-supply dynamics that you're probably seeing globally still remain soft. We're probably looking at the carryover inventory of the first half of this fiscal domestically still remaining at higher levels. The MIP introduction probably is sentimentally positive, but again, I think the demand revival has to be extremely strong. The end user industries to both ferrous and non-ferrous metals that cater, I think they're still in a very, very weak spot. So I think unless you see a structural demand and volume recovery happening, our own take is that the operating cash flows for a lot of these metal companies will still remain weak.
Okay. Well, Sri Shankar, you were going to identify mid-cap buys for us. Can we start? What would be your favorite mid-cap pick?
Lata, in fact, we have had in our topics certain mid-cap ideas like Hexaware Technologies, Jubilant Life Sciences, Sadbhav Engineering, JK Lakshmi Cement, Capital First, SpiceJet, Ashoka Buildcon, VRL Logistics, NIT Technologies, Water Baba, etc. We still continue with these topics. We have not changed it over the last 1 month. And we think these are all in airlines, SpiceJet, and we have not initiated coverage on Indigo as yet. So, in the IT space, we
Shankar, let's do one thing. Let's take them one by one, because you just said SpiceJet, and today aviation stocks have done well. Why SpiceJet over, say, Jet Airways or Indigo? Is this valuation parameter that you have used? Let's go one by one.
See, I mentioned that we have not initiated coverage on Indigo, though we are in the process of doing so. But aviation as a sector, which we continue to like, for the simple reason that there are 3 factors which probably will determine the aviation story in India per se. One is demand. I think demand is doing pretty good, and it's in the high teens, I must say. That strong demand continues to be there. Second is the load factors. As a result of this a strong demand, you've seen the load factors for closer to 90 plus for Spice, whereas it's more than 84 or somewhere for Indigo, etc., which is continuing to be stronger. And the third part is the largest cost of their operating expenses, fuel. And fuel again remains on the lower side. So unless we see a sharp spike in crude oil prices above $50 or anything, I think these companies will still be in a much better space. And the fourth important point, unless we see large amount of capacity addition in the airline industry, like what we saw probably during the Kingfisher versus Jet Airways era, when everybody was trying to get larger market share and probably there was excess capacity in the system. So today the capacity in the system is low. So as long as this environment continues with a stronger demand growth, I think, and with low crude prices, the sector itself is in for a great growth.
Okay. And what about autos and auto ancillaries? Any buys in that space?
There are buys in that space, but among our top picks, we don't have anything on the auto ancillary space.
Okay, by the way,
but in the automobile space per se, we still like Maruti, we still like Tata Motors.
Okay, the Nifty is still back to that 7,600 mark, and a couple of other stocks where we have seen quite a bit of intraday decline. Let's pull out the intraday chart of GMR Infra, and that stock is now trading at low point of the day. But really, the stock that's dragging the market quite a bit now is Axis Bank. And again, if you see the intraday chart of Axis Bank, it might have actually moved up in the contribution plate as well, because now the stock is down 4%. It's become quite a bit of heavyweight now as far as the index stocks are concerned. Okay, it's not there yet. ICICI Bank is still the top contributor along with Sun Pharma and HDFC. But in the Bank Nifty, of course, it's moved to the number 2 spot behind ICICI Bank. It's only Kotak which is trying to hold. The Nifty is now slipping. In fact, it's now sliding 75.93 as we speak. Sudarshan, for a Nifty trader, is there a short trade which is available now with a stop loss? Could this be the start of a new trend? Could this be a spot where maybe some aggressive shorts would like to enter?
No, it could be, but for me it's not yet available. See, a new trend would mean that the rally from 68.25 to 77.50 is over and the decline has started, and if this decline could easily take us back to 68.25 or lower. I doubt it. I'm still classifying this as a correction. We've had 2 different corrections when the rally started from the 6825 level. This is a third one. We can have 4, 5, 6. There is no limit to the number. So I would not be a willing short.
Okay. At what point will you reverse this stance and say that the uptrend is less secure, or at least it's reached its highs?
Well, that's a fair question, and that would be 7,400, because the market can correct. It's 100 or even 200 or 300 points of a correction would be normal. It is only below 7,400 that a significant support would be broken, and then we start thinking what it is.
Okay, by the way, let's pull out Maruti's intraday chart now. It will start to happen now. A lot of these stocks will fall. Of course, it's Vedanta and Hindalco which clearly stand out. Both of them are now approaching a 10% intraday decline. That's massive. But really, Vedanta and Hindalco are trading stocks, so it does not matter too much. But portfolio stocks are now beginning to fall. Started with Larsen and Toubro, Axis Bank, of course, now Maruti Suzuki, and now the Nifty is at 75.90. Let's do one thing. Let's get an insight into dealing room chatter. Nimesh Shah is here with Trader Talk. Nimesh, this came out of nowhere. No one would have expected this kind of fall today. What are dealers saying?
Oh yes, Anuj. In fact, most of the dealers are a bit surprised with the ferocity of the move by which the Nifty has given up almost 100 points in the second half of trade today. The couple of reasons for it. One, of course, the FI volumes are on the lower side because many of the international markets, including Hong Kong, is shut. So there are no large volumes coming in from the FIs, and the buzz on the street is that some of the large index funds are sellers into large cap stocks. Maybe that's the reason why the metal names are down 10%. Banks are under pressure in trade today, and there is no buying support coming in from larger institutions. So maybe that's the reason why we've seen such a sharp cut in the Nifty today. But broadly the sense is, given that it's an expiry week and the fact that we have a year end as well, you might see this volatility for the next few days playing out. But still there is a hope that maybe this expiry would be around 7650 level. So still the dealers have not given up the hope of a positive level and a bit of a rally from these levels, and a close of around 7650, 7700 on the Nifty. But clearly today's fall is a bit surprising, and the fact that the volumes from the FIs are on the lower side. So that's playing out to some extent. There is a mismatch between the supply and the demand in trade today.
Okay, thank you very much for that perspective, Nimesh. So traders not quite throwing in the towel, and we have one expert who still believes that his stop loss would be 7550 rather than 7600. Rahul, if that 7550 is not breached, you carrying on with long positions?
Yeah, I still think so. I think, it's too quick. One day is too quick. Of course, I mean, if you have risk reward, definitions, etc., that's a different issue. But, if you look at this market technically, if you look at, say, the first half of March, we pretty much went to 75.30, 75.50, not once, but 3 to 4 times. And, that kind of worked in as a resistance in those days before we had the breakout. So likewise, when we're coming back to those levels, that ought to work in as support. When you look at volume factors, when you look at volume profiles, you look at the F&O data as well, I think all of that circles around 75.50. So, give and take a few points from there, I think that's really the bigger number to watch for. I won't really, rush into these intraday spurts that we have, whether it's on the up or down side. One has to look at this a little more patiently. As I was recollecting, back in March 14th, we still had a 200-point cut, and it was a correction. So even though you're seeing it quite savage and quick today, it's too quick to call it anything but a correction.
Fair point. Sudarshan, on that note, some of your buys or long positions are still working and making money. Bosch, for instance, Gale, for instance. You take money out even in these stocks?
No, generally, once the Nifty starts giving a level, breaks a level that is disconcerting, you lighten up your long positions. In this case, the 7600 level was broken, and I would say that we should try to take money off as much as possible. And the worst that can happen is that the market will rally back to 7700, and we'll have to buy at 77 again, and that's fine with me.
Okay, by the way, the one sector which was holding on, aviation, there also we have seen big intraday declines. Jet Airways clearly is now down about 2% from the high point of the day. In fact, it slipped quite a bit, almost about 4 or 5% from the intraday high. So 1.8% lower is what we have on Jet Airways. Before we take a break, Srishankar, large cap pharma names, you like Aurobindo, you like Glenmark, but these stocks have been very volatile, and in fact, no longer a safe haven. We have seen so much decline in pharma names. Overnight news and stocks fall 10-15%. Is there margin of safety here, or do you think we could see a fresh round of selling going forward?
I think, Anuj, again, we need to look into this entire pharma space. There is in certain cases you're going to have a certain exclusivity for certain kind of products. A large amount of profits could be one-off, etc. If that window of exclusivity gets reduced, or the market size that you have envisaged at initial point of time turns out to be on the smaller side, then the impact that they can have on the profitability from that particular product becomes quite high. So you're bound to see some disappointment in varied levels of success ratio stroke disappointment ratio, depending upon which side of the coin you are in. These stocks are bound to move in a highly volatile manner. So you'll because all these stocks today, the pharma space, when I say all, most of the large cap ones, you name from Sun, Lupin, to Cipla, to Glenmark, Aurobindo, everybody. Aurobindo was graduated in that category, and Glenmark moving up the category in terms of size. They are not smaller size companies like $200, $500 million companies. Today they are up in billions of dollars. The market cap is. So a large amount of exposure, large amount of profits also comes from pharma exports to the US. So this exclusivity and one-offs and what's happening around the world is going to have a huge impact. So I think I wouldn't call it as a margin of safety, or earlier an economic slowdown, this pharma and FMCG were relatively the safer havens. The old saying that we used to have 20 years back, that's no more holds right for pharma companies. Today it's more of what's the opportunity and how these companies get that opportunity or lose that opportunity. Any news of losing that opportunity probably the stocks get cracked big time.
Okay, well, gentlemen, we have to take a break and then it'll be time for the last half hour of trade or last 20 minutes of trade. Let's give you the money closing bell money control question of the day, and that question is, do you see a big sell-off coming? Now go on to moneycontrol.com, post your responses there. We will read some of the more interesting responses after 3:30. Back in a jiffy.
Back. Well, today does not look like a random move, and I tell you why. Because if you look at the turnover picture, the cash market volumes are humongous. It's 15,000 crores already. So you should end somewhere around 17,000 crore thereabouts, because you normally add bulk of that in last 30 minutes of trade. And more stocks are falling now. Tata Motors intraday chart should come up for you, and that stock is down quite a bit. Expiry weeks are normally about momentum. It clearly hasn't started on a good note. Let's see if this turns out to be a random move, or maybe it's a bit of a start of a new trend. For now, let's do one thing. Nuresh Mirani is here from Asian Securities to tell you what to buy or sell today for a reverse trade tomorrow. Nuresh, hi, good afternoon. Your ideas?
And the first stock call would be a buy on Hindustan Unilever with a target price of 890 and a stop loss at 855. And second would be a buy on Ashok Leyland with a target price of 110 and a stop loss at 101.
All right, fair enough, Naresh. Thanks a lot for those trading ideas. Let's go across to Varinder as well. Okay, before we do that, just a couple of more chart checks. Sudarshan, a word on Tata Motors first. I know you don't give too much importance to 200-day moving average, so that disclaimer I would make up front. But the stock is trading below that. How would you approach it?
Well, Tata Motors is doing what the Nifty is doing, is going through a mild correction. So I would still be a buyer on dips in Tata Motors, as I would be for most blue chips. I have to keep this saying this, and I know it's not matching with today's price action. A change of trend would mean that the Nifty is likely to take out its earlier lows of 68.25. I very much doubt it.
Okay. And in any case, you have a stop loss at 7,400. What would you pick in the dips, Sudarshan, for a positional trade?
That's a much more interesting question. I would go for all the 4 IT stocks, Wipro, which is the lowest but still there, TCS, Infosys, and Tech Mahindra. That would be my first pick on a dip. And secondly, the auto stocks. Maruti is giving us a wonderful chart after that big decline from 4,800 to 3,200. Maruti would be a pick.
Okay, let's do one thing. Varinder has yet again managed to find out some more buzzing stocks. Let's go across to him. Varinder?
Well, I know it's the chemical sector. That has been one, which has been gaining since last few days. Look at Navin Fluorine chart since last few days, up nearly 6% today. Had gained nearly 25% last week. This stock has been just moving and making new highs. ZF Steering, that stock was up 20% Wednesday and gaining today as well. Some of those holy picks, TVS Electronics and Zycom doing very well. Phoenix Chemicals also moving up. As I said, chemicals, you had Vishnu Chemicals. These are stocks which are moving up. Some other small cap gainers like Akar Tools, HOCL, another chemical stock, Sharp India, Shriyan Resources, Balaji Amines, Waterbase, Rushil Decor, Fresh Trop Fruits, Ramsons, Expro India, AK Capital Services, all these stocks are moving up anywhere between 5 to 10%. There are many losers, of course. The list is big. ABG Shipyard, Natco, SJV, and that stock was down only 8-9%. Monsanto down nearly 5%. SD Aluminium, Welspun Corporation. There is signs of profit booking which has started in some of the sugar companies. Perry Sugar is down nearly 7-8%. Jindal Stainless, Hisar, RS Software, Marksons, another low for the company. VIP, Vascon, SDL, HOEC, GMT Auto, all are down anywhere between 5 to 10%.
Okay, thank you for that handy list, Varinder, but really too many buzzing on the red side today. Tahir Badshah of Motilal Oswal AMC has also joined us, and Mayuresh Joshi of Angel Broking is also speaking with us. Tahir, what's the sense you have picked up? Is this a trend reversal? Would you worry? Would you step aside and stop buying?
No, I don't think so. Not at all. I mean, I think it's a good opportunity once again after that massive rally that we had from the recent lows. So it's not very surprising that we are giving back a little bit, and we might probably have another couple of 100 odd points, maybe if at all, to give up. So that's something which is part of the regular course of correction that one would see. So it doesn't really look like it being any great surprise. Of course, the velocity has been a little higher today, both on the large caps and the mid caps. But I think it could probably be also on account of certain year-end considerations or certain technical factors. We also have an expiry in front of us and so on. So I think it's clearly not something which one should fear away or try to move away from. It's a time once again to probably use these opportunities to build, because I think fundamentally things are reasonably strong, and we are seeing many indications of a recovery. So I would reckon that there's a good buying opportunity.
Tahir, hi, good afternoon. One of your top holdings, of course, is Maruti. Would you use the dip to buy? It's from the low it had a big rally, of course, like many other stocks, but today we have seen a decline again.
Yeah, I think it was kind of reasonably stretched at about 4,500 odd when valuations were also kind of a challenge, and there were a couple of factors which were kind of negating some part of the gains that they had. One being currency, the other being that we've probably seen a little bit of hardening in commodity prices and oil. So there was that was a point which was a little difficult, but I think now the correction has been fairly sharp in a very short period of time, and in the meanwhile I think we've not really seen as much of a issue with the demand situation. Demand situation remains reasonably robust. Retail should probably be higher than wholesales, and to that extent we'll be seeing some decent numbers coming on account of the new models as well. So I guess this is turning out to be now a far better opportunity in this whole correction than what it was maybe 25% higher.
Okay. There are a bunch of banks who are likely to get money from the government. I'm a little surprised by the kind of list. The original plan of the government was that smaller banks, especially banks which have not rendered a good account of themselves, and one would pick IOB in that because it's already got a warning from the Reserve Bank, will not be given capital, and they will be asked to rather fight for getting recovery and managing with their own finances, crunching the amount of lending they do. But this list, and mind you, this is still source based, it says that OBC, Dena, IOB, Central Bank and Vijaya Bank are likely to get money, and SBI, BOB, I'm not surprised by that list, because in any case this is peanuts for SBI, and BOB has already indicated that they are not looking for capital anytime soon. So that they are excluded is understandable, but the inclusions in this list are still surprising. We'll wait and see.
And you know what, as you would have it, it's the smallest priced banks which are rallying the most, Dena, IOB and all. This is more of a trading point more than anything else. Yeah. A lot of people would believe it's throwing bad money after good, but or good money after bad.
It's all 40-50 pies that they have risen, but it will look like a 5% rally.
Yes, it will. Dena Bank in particular stands out, of course. That's up about 0.5%. Tahir, any call on PSU banks, or would you give it a wide berth?
No, I think these are clearly times when one has to reassess the space. There will be a handful of banks, the larger ones, amongst the larger ones, which will probably end up doing well. I think it looks like a fairly decent turning point now for the sector as a whole, if we were to bring to pass quite a number of the initiatives that we have started on with. So a couple of years down the line, if we can probably get even partially cleaned up our banking system, I think that will be a big achievement. And not many countries, in fact, both on the developed side as well as on the developing side, are actually taking the bull by the horns and saying that let's clean up our banking system. So I think it's a good beginning, and we will probably see a few stumblings along the way. But there could be some opportunities which will clearly come about. If you worry too much about the next 1 or 2 quarter numbers, then I think one will find it difficult. You'll have to take a slightly more longer term call on these companies and these banks for sure.
Okay. Well, Mayuresh, what are you all advising your clients to buy now that the market is a little cheaper than what it was last week?
So selectively again, Lata, and again in small tranches. large cap IT is something that we remain extremely optimistic about over the next 6 to 8 quarters. This quarter again will be defining in terms of how the discretionary spending trends are panning out. But again, I think with the accent short guidance, one really expects the revenue growth both in dollar and rupee terms, at least for the top IT companies, to remain extremely strong and robust for the next 4 to 6 quarters. Auto and selective auto ancillary companies is something that we believe should do reasonably better. You should see signs of volumes picking up both for selective two-wheelers, selective four-wheelers and selective players within the MHCV space. Having said that, I think the input cost benefit or advantage and leverage that a lot of these companies enjoyed are largely factored in at this point of time. So it's going to be a story of volume growth, which we believe, if the monsoons are good, I think a few of the two-wheeler companies will benefit. If the cable cycle picks up, as I mentioned earlier, over the next few quarters, you'll see a lot of these MHCV companies do extremely well. And again, I think selectively we're looking at cement stroke infrastructure companies, the largest cement companies, again largely based on how volume and demand recovery will come through. If one really assumes GDP to grow at 7.5% and multiplier effect of 1.5 times, you might probably expect to see the cement companies boosting volume growth of 10%.
Okay, I guess the first sign of some lower level buying in a couple of stocks, which has propelled Nifty back from the low of 75.90 to 76.25. So it's about a 35 point recovery that you have seen in the Nifty. Courtesy HDFC Bank to begin with. If you pull out the intraday chart, it's still in the red, but from the lows, it's seen a bit of a rally, as has Kotak Mahindra Bank. In fact, Kotak Mahindra Bank is still one of the biggest winners in today's trade, and also at its 200-day moving average. So Kotak Mahindra Bank now trading at high point of the day. Tech Mahindra still in the red, but it's recovered most of its losses, almost about to break into the green. That's Tech Mahindra for you. Look at that sharp spike that you have seen intraday in Tech Mahindra. And Bosch and Bajaj Auto are a couple of other stocks where we have seen some bit of intraday pullback at this point in time. Tahir, the other stock that I want to discuss with you is the entire aviation space. You have a large exposure to Interglobe, but would you be willing to look at something like a Jet or SpiceJet, or is Interglobe just a stock-specific call that you have taken?
So it is definitely a stock-specific call, and it's of course it's the good part is that around the business the broad industry tailwinds are in order, and that bolsters the overall story for the company. But then there are various company-specific factors which are also part of the overall excitement around that company, and that is something which is not necessarily available in all the other companies in the sector. So I think there is a certain attraction in the positioning of a company like Indigo in that sector, and that is something which is what is driving our call on that company.
Let me get back to Rahul and Sudarshan now that we have just about 5 minutes of trade left. Rahul, you kept your longs. Would you pick anything or have picked anything in the past half hour when the market gave attractive levels and is still giving?
Well, I was just looking at sugar stocks briefly. Some of them have corrected a bit. I still think this is again a sector which comfortably looks solid if you're looking at a 3 to 4 week perspective. I was looking at some names like ACC and L&T on the frontline cycle. I think they too look fairly all right. It's really, I was trying to look at what are the 5 stocks that I would short in the Nifty, which have clearly strong technical sell setups, and it was getting hard to find, which kind of reconciles me a bit that it's still probably not the time. It could be in a few days from now, but I still think 75.50, and that it could just happen that level breaks. I think we should take it from there, but at this point again I'll stay firm with that view.
And Sudarshan, which kind of traders? You would have asked the day traders to book profit earlier say in the show, and it is the positional traders who you would want to take positions now?
No. When we talked about the Nifty, I haven't given much of day trading advice. It's swing traders and position traders who are carrying positions from 70 to 50 plus onwards. They should be exiting because the Nifty broke a critical risk management level. That's all. So it's primarily old traders.
Okay.
Now we will get a buy signal again, so we'll buy whenever that comes.
Okay, whenever that comes. 3.5 minutes left for markets to close. So let me just squeeze in one last question. before markets close. It will close quite off the low point of the day. That has to be given. But Rahul, what would be your top BTST idea if you have to take one, if you are still bullish on the market right now?
Well, if I had to take one, it would be Wipro. I pointed this out earlier, and I still think Wipro is one of those stocks which looks fairly solid. 580 is my target on that stock, so would continue to buy in there.
All right, so net, let's do one thing. 3 minutes left for markets to close. The Nifty was down 120 points. It's recovered 40 points from there, so it recovered 1/3 of the last ground, which is not too bad actually, considering that at one point it looked like it will break 7600, close below that, and maybe even make a move towards 7550. None of that happened, courtesy a couple of stocks like Tech Mahindra, HDFC Bank, Kotak Mahindra Bank. But we'll talk about that later. First, let's address the biggest losers in trade today. Of course, the two big drags were ICICI Bank and Larsen & Toubro. Both of these stocks were down quite a bit, though ICICI recovered a bit towards the end. Tata Motors was the other big drag. That was also down 3.5%. Maruti was down 2.5%. Axis was down 2.5%. And HDFC was down 1.5%. These were the stocks that accounted for bulk of Nifty's fall. But they were not the biggest losers. The biggest losers, of course, were metal names, led by Vedanta. That was down 9%. Hindalco was down about 8%. Tata Steel was down 5.5%. I forgot to mention Sun Pharma among the big losers that dragged the market. 4.5% lower on Sun Pharma as well. And again, it turned right back from its 200-day moving average, so not good on that one. BHEL, Lupin, Bharti were some other losers which were down over 1%. Coal India, Cairn India, HUL. So the list was long. What kept the bulls in the game? Well, Kotak Mahindra Bank for sure. That ended at its 200-day moving average at the high point of the day. Ambuja Cement, in fact, Cement has had a great rally all through this month. This month, Ambuja is up 23% if you add today's 1.5% gains. And a couple of other names like PPCL and HDFC Bank. In fact, HDFC Bank accounted for lion's share of the recovery that you had towards the end. So it ended only with 0.25% of gain, but from the lows, it recovered quite a bit. But it was a rank bad day for mid-caps, Lata. Advanced decline ratio was telling you that traders had a bad day today.
Yeah, it only got trimmed a bit. It was almost 5 stocks in the red for 1 in the green. It's now ending more like less than 4 stocks, so 3.5 stocks in the red for 1 in the green. But that still gives a very poor average of 75% of the market, lower than where we left it on Wednesday evening. The biggest cuts were, of course, in the metal stocks, but there were others as well which shared that bloodbath. Marksans Pharma down 8%, DLF down 7.5%, JSW Energy 6% down, SAIL down 6.2%. Among the banks, Federal Bank, Canara Bank both down about 5%, 4.5% apiece. Reliance Communications was down 4%. Reliance Capital was down 4%. So ADAG Group as a lot saw a decent amount of profit taking. Bank of India among the banking stocks also saw losses about 3% lower. And among the ADAG Group, Reliance Power as well. So almost all the Reliance ADAG stocks saw profit taking, barring Reliance Infra. Among others, the aviation stocks also saw selling. Interglobe ends with a cut of 2.5%. Everready has lost 2.5%. Bajaj Finance as well, a stock which has been consistently giving gains or profit taking. So it was all over the place. I mean, it wasn't restricted to one sector. The mid caps saw significant amount of profit taking, and among the more say high beta stocks, like for instance the ABJ shipyards, the Titagarh wagons, the losses were much steeper.
Yeah, let's do one thing. Let's get some more stock calls. Tahir, Britannia is a stock that you've liked. You have investments and fairly large ones at that in the stock. What did you make of today's weakness, and how would you approach that stock?
Yeah, I think it was a little surprising to see it to be weak in today's trading session. I don't really know what exactly has been the reason for this. Maybe a little bit of hardening of some part of the input prices perhaps. But I think it still is a reasonably key position in our portfolios up until now. And we believe things are kind of relatively strong for them in terms of at least volume growth going forward. I think we are fairly confident of rural incomes getting better during the course of the next year or two, and that should probably accelerate the volume growth in many of the FMCG companies, particularly those which are a little more in the lower end of the base of the pyramid. So I think there is clearly a volume benefit to be gained out there. They've had a huge margin expansion. I don't really think that is going to continue for a lot, but it's still good enough for a more near-term earnings trajectory of around 20% plus, and probably more medium-term of anywhere between 15 and 20%. So I think that is the promise that we still continue to hold on to for now in that company.
Okay, for the viewers, I just want to make a point. You're seeing two Nifty rates, one on the stack, which is 76.30, and one, if you pull out the graph of Nifty, you'll see 76.15. 76.15 is now the post-adjusted rate of closing that you have on the Nifty. 76.30 was the last closing rate on the Nifty. Last closing rate, of course, indicates the level at which the Nifty actually closed. It takes into account the last 30 minutes of weighted average price, and that's why you arrive at 76.15. The best way to look at what happened today would be Nifty futures, because the Nifty spot is showing you down 101 points. The Nifty future would show you down 76 points. So the Nifty had a decline, not saying that it didn't have a decline, but the decline is not as much towards the end as maybe the Nifty is indicating. Maybe the Nifty future would give you a bit of a better indicator. For all practical purposes, if you see the premium of 44 points, that's because it's taking into account 76.15, which is the average closing. Otherwise, the closing was at 76.30. Sudarshan, what's your reading indicating? Would a long trader still make more money in this market than a short trader? Is that how you'll classify the market, as long as your stops are being honored?
I think that's a very fair statement. Anuj, yes. I think this market is in an uptrend. Now, in an uptrend, the long trader invariably is supposed to make more money than the short trader, because we are only shorting and taking the corrections. And when we are buying, we are taking the big impulse up moves in our gains. So now, sometimes risk management demands the placing of stops, as we did today, and the stops get hit. That doesn't matter. There will be buying opportunities again. This market is unlikely to stop. I mean, it's going to surprise us on the long side.
Okay. So what will be the signs you will look forward to once again start picking stocks?
Well, the first sign for the Nifty itself would be if the Nifty takes out 7,700 again.
Okay.
I think that would be an initial buy signal, and then of course patterns will change.
Okay. Well, gentlemen, thank you very much for taking us through the last tricky hour of trade when the market seemed to give up everything and then showed some spirited recovery. Rahul, Sudarshan, Mayuresh and Tahir, thank you very much for joining us in this conversation. Well, we have a very important guest joining us now, Kiran Mazumdar-Shaw, the Chairperson and Managing Director